Good afternoon, traders and investors. Will back here with another one, coming to you with a Monday market update. Hope everybody had a very beautiful weekend. And in today's markets, guys, well, it was a very exciting day. The bulls actually had decent control of the day, but the highlights were not really in the technicals for the day here today, guys, nor in the macro news. No, most of the energy came from some of your classic meme stocks. GameStop up about 74% on the day, and AMC also up about 78% on the day, and even more in the after hours. So what exactly happened? Why are the meme stocks back, guys? Well, the man himself, Deep Effing Value, also known as Roaring Kitty, the guy who made over $30 million on this trade from Wall Street Bets on Reddit 3 years ago at this point, has now come back, posting for the first time in 3 years. His last post was June 18, 2021, and yesterday he posted the classic picture of the lock-in meme, meaning that you're going from being complacent to starting to lock in, potentially signaling is the bull market back for even retail meme traders. Very exciting stuff here, guys. And in other news, we also had another piece of very bullish news too, in terms of a new OpenAI rollout of their new ChatGPT 4.0 that we're going to cover in today's video, guys. So those two news headlines we are going to go a little bit deeper into shortly. We're going to cover those for you. And then second, we're going to go through our major technical analysis rundown of our major stock market indexes and our major big tech names. And lastly, take a glimpse into my portfolio and see the trades that I made today. So without further ado, guys, let's get right into today's video. SPY up 0.01%, barely flat on the day. QQ up a nice 0.23%. Overall, though, the markets were fairly decent here, guys, right? Fairly mixed market as a whole. Some big tech names up, some down. The bottom half of the market not cooperating that much today. Financials were in the red. Healthcare, fairly mixed sector as well. And the bottom half of the market, very mixed, guys. Not much outperformance to the upside and not much heavy drawdowns to the downside either. Now, this muted market day could be potentially because traders are expecting and potentially waiting as well for the big day that's going to come on this Wednesday, guys. Wednesday, we have CPI data. Is going to be a very huge day for the markets. A lot of volatility. Keep in mind, the last 4 months, the inflation prints have been going steadily higher. So this month could be a very crucial pivot point, guys. If once again we come in above the expectations of 3.4, the markets are not going to like it. However, if we finally start downtrending after 4 months of upside, well, that could be a beautiful opportunity for the SPY and the QQQs to start smashing to new all-time highs. So that will be your noteworthy event for the week. In other news this week, we also have a few more company earnings. Tomorrow, Alibaba, Home Depot, but for the most part, guys, most of your major earnings are already through. We have a few more on Thursday, Walmart notably. John Deere as well is going to be part of that. And then one of my favored semiconductor trades, Applied Materials, AMAT, will also be reporting on Thursday. So a lot less earnings this current week. We are wrapping up earnings season, and for the most part, it's been a very healthy season to wrap things up, right? So before we get into further technical analysis here, guys, let's take a quick look into the news articles that came out today. And we're going to start it off with the big one of the day, Roaring Kitty, right? So he came back last night tweeting on the platform for the first time. Now, obviously, guys, that was extremely bullish. Take a look at the amount of visibility that his account has. It's right down here where my mouse is. 20 million people have viewed this post, and obviously you can tell that obviously carried into Wall Street Bets community as well, reposting of the meme, and then all day all you were seeing was pure YOLOs into GME and AMC Stock. $30 calls, $80,000 position, right? GameStop YOLO, another $20,000 GameStop YOLO, right? And the trend just continues. GameStop, but not only there, it also comes into AMC as well. If we scroll a bit further down here, you'll see that a few market participants are obviously playing AMC as well, even some BlackBerry shares. So they're really going for the companies that are on the verge of bankruptcy. Here's an AMC position as well. This guy went in with $90,000, right? Absolutely ridiculous. Well, he actually went in with probably closer to 30, and the unrealized gain is about 62. Huge gains to be had at the open today after such a significant event. So the speculation, he's been posting pretty much videos all day, and they're these kind of theatrical videos. If you guys remember Wall Street Bets from about 3 years ago, these video style memes were very popular. Now, he's been posting them, but as a matter of fact, a lot of people have been speculating potentially, right? His last play was on GME, but since he's been posting fairly noteworthy movie excerpts, a lot of people are speculating, and it is just speculation here, guys, right? We're just having fun. A lot of people are speculating that maybe, just maybe, he's building a position on AMC because the hint is obviously movies, right? Cinematic content. So he may potentially be taking a position on AMC. All speculation so far, but that was enough, guys, once again, to drive up these meme stocks, ridiculous amounts of gains. So we will see how these moves keep underway over the course of the week. But as of now, guys, it does look like he ignited quite a fire by coming back to the scene after pretty much being silent for the last 3 years. So very, very interesting. Quite pleased. And if you were able to get in, guys, well, congratulations on the gains today. There will be a way to play this. I'll get into the way I'm playing this at the end of the video when I go over my positions. We're going to play the volatility, not necessarily the speculative direction play. Now, moving into our second piece of news article, OpenAI unveils a new AI model as the competition heats up. So they actually had a presentation day today and unveiled some very cool updates, guys. ChatGPT maker OpenAI said on Monday it would release a new AI model called GPT-4o. Capable of realistic voice conversation and able to interact across text and image. So it can read text, read images, and give its input. That is very, very crazy. Its latest move to stay ahead in a race to dominate the emerging technology. New audio capabilities enable users to speak to ChatGPT and obtain real-time responses with no delay. This is speculating on potentially as well what Apple is trying to do with Siri. We'll only start hearing about that in Apple's June conference, its investor presentation day, where it unveils what it's working on. But as a whole now, ChatGPT attacking that voice AI segment. As well as interrupt ChatGPT while it's speaking, both hallmarks of realistic conversations that AI voice assistants have found challenging. The OpenAI researchers showed at a live stream event. It feels like AI from the movies. Talking to a computer has never really felt natural for me. Now it does, says CEO Sam Altman for OpenAI. And you can see here, ChatGPT tops chatbot and search website visits. ChatGPT is in green. It is really dominating the markets. Its closest competitor is currently Bing.com. The reason you don't really see Google's offering right here, Google Gemini, is because this is really only AI native platforms, right? You won't really see traditional search websites like either Yahoo or Google.com. It's only measuring AI tools against other AI tools. And we can see the two largest competitors right now are OpenAI, which is backed by Microsoft, and Bing.com, which is owned by Microsoft, right? So Microsoft pretty much dominating the landscape in the AI search world. Now, moving on further, Microsoft-backed OpenAI faces growing competition and pressure to expand the end user base of ChatGPT. Now, at the live stream event, OpenAI researchers showed off ChatGPT's new voice assistant capabilities. In one demo, a ChatGPT used its vision and voice capabilities to talk to a researcher through solving a math equation on a piece of paper. In another demo, researchers showed that GPT-4o's model capability of real-time language translation. Take a look at this, guys. OpenAI's demonstration verged on science fiction, ChatGPT and its interlocutor at one point engaging in coquettish banter. The OpenAI researcher told the chatbot he was in a great mood because he was demonstrating how useful and amazing you are. So that's what he told ChatGPT, and ChatGPT responded, "Oh, stop it, you're making me blush." So these conversations, guys, the AI is getting smarter and smarter and smarter to the point where it's kind of getting a little bit scary, right? That's why they were talking about it feels like AI from the movies. So very nice advancements in AI for the time being. Quite happy about that. And as a quick reminder, Google has its own AI event, and that is labeled to be happening tomorrow in the afternoon. So it could be a very interesting market moving event, at least for Google stock. So with all those news headlines, guys, out of the way, let's take a quick dive into our technical analysis rundown of our markets and see where we are. So currently, guys, SPY still in the midst of this very healthy daily uptrend right now, guys. Looking very good, not going to lie. However, if we take a look at the futures, you can see that we're kind of hesitating here at the top. So to be fairly sure, guys, if you want to be sure that the daily uptrend is currently sound, just look at the 4-hour trend, guys. The 4-hour 12 EMA should be your guide. If we were to lose that into the tomorrow session, 4-hour downtrend is underway, and you would just be starting very healthy daily consolidation, right? after such a very nice extended move to the upside, could be just looking for a daily higher low. Anything pretty much about 515.16, just can be looking for that daily higher low. And if for ever which reason this week sparks off another daily downtrend round for the markets, we'll just be looking for the weekly higher low after that fact, because on the weekly, guys, we have now engulfed, well, almost 100% of the move. So eventually we will need to set that weekly higher low. So the expectation is as follows. Since the bulls are pretty much back in control of these markets, we're either going to get the complete V-shape engulfing move and then maybe set the weekly higher low like this, sit on the previous all-time highs and run, or the worst case scenario could be something like a little bit of a retest down here and then reset the weekly uptrend in the bulls' favor. So looking fairly good. A big pivotal crucial element of how this weekly move could play out to the upside or straight V-shape is going to be CPI, guys. If CPI is very, very good, expect potentially the break to the all-time highs. But if CPI is a little bit bad, may just be a time to reset a bit lower and then re-engage these markets higher thereafter. So we'll take this one day at a time. But as a whole, guys, market's still extremely bullish. Moving on to QQQ now. QQQ, pretty much same analysis, right? Daily uptrend on the QQQs. Any pullback, just looking for a daily higher low. Anything above 437.43, just looking for that daily higher low for further trend continuation. Your moving averages are all down here, and we're also well above our box of support that we've labeled on the chart with this green box right here. And that is pretty much 435 all the way down to about 428, looking very, very good. The bulls have created a ton of space off the weekly lows as well. So the same analysis, right? Even if we were to lose this daily downtrend as a result of bad CPI, just going to be looking for the weekly higher low. And the bulls have created a ton of space off these lows right here, guys. So that is literally what we're going to be looking out for this week. Whether or not the bulls with positive CPI can smash the all-time highs. If CPI is negative, they have tons of space to regather themselves and make another attempt. So we'll take this one day at a time. Now moving on to financials. Financials pulling a little bit back today, but that's fine. They've really rallied for the past 5, 6, 7 trading days in a row. Daily uptrend confirmed, just looking for a daily higher low, anything above 40.2. Looking for that daily higher low for further trend continuation. Target this area right here. I'm going to put a yellow line right here, excuse me. Right, we're going to do something like this, where if it can actually work, there we go. All right, so previous support, previous resistance, this whole 4130 level is going to be a likely fallback area for your bulls. Your moving averages are also there as well. So it could be an opportunity for the bulls to touch and then potentially rise higher. But once again, CPI will be a market moving event, guys. The bulls at least have a lot of space above these lows. And on the weekly, guys, the weekly is looking very good. Weekly uptrend back to the bulls, very close to your all-time highs. No red flags just yet for financials. One of my favorite financials plays currently, guys, is still Charles Schwab. Charles Schwab, right, doing excessively good, pretty much recapturing all of the past March drop of last year, maybe looking for a retest of this 71 zone right here, looking very, very good for a financials play in my opinion. And obviously the other two that you know I'm pretty much very bullish on, the fintech plays. They're not quite direct finance plays, but they're more fintech plays. SoFi around $7, juicy level, and also Square. Square's been performing very well. Square anywhere in the lower 60 levels seems to be like a very nice location for a swing trade, and I may be exploring those opportunities myself in the next coming weeks. Now moving into healthcare. Healthcare also not looking too bad at all. So healthcare, you know, same thing as the rest of the markets, right? Daily uptrend underway, just going to be looking for a daily higher low as soon as this move is topped out. How do you know the move is topped out? Once again, guys, you guys should know this by now. Daily move is topped out when the bears set the hourly downtrend. So far, no hourly downtrend, just a double bottom tight range. If we break these lows tomorrow, that will be the end of your daily bounce on healthcare. And then we'll just be looking for the daily higher low for further trend continuation. A few areas of confluence should be this one right here, 141.50, right? Previous resistance, and all your moving averages are down there as well. We could definitely see something just like this to resume the trend to the upside. In terms of your weekly moves, it was a weekly downtrend. We were looking for the size of the bounce, and the size of the bounce now is fairly adequate, guys. It wasn't the best when we started last week, but last week was really good for healthcare. We're now up to a 61.8% bounce, which is probabilities wise exactly what you're looking for if you want the bulls to set the higher low into higher high. The size of this bounce is quite adequate. I like it very much. So healthcare is still moving forward. My favorite healthcare stock that's currently on a discount is AbbVie, right? AbbVie, one of my favorite plays. Gorgeous monthly uptrend, breakout, retest of the prior all-time high range, and potentially looking to run later on throughout the year. Moving on to semiconductors now. Semiconductors, I mean, having a roughly flat day today, right? But all in all, looking fairly decent. NVIDIA earnings are next week, so that's going to be the big market moving event for them. So daily uptrend still underway currently, and now we're just kind of flagging at the top here, right? So keep a close eye at this level right here, 218.83. We set the daily higher low. As long as this trend continues expanding, still in the daily uptrend. However, if we lose this level, loss of the daily uptrend, and then we'll be looking potentially down here in this pocket of support. We're talking about, anywhere between 215 all the way down to about the 212, right? This whole level of support that we previously broke through. Now we're back above it, and also your moving averages are acting as a confluence here too. No red flags at all. Even if we lose the daily uptrend, something like this here, guys, tons of support down here. And then at that point, we'd just be looking for maybe a weekly higher low to give us the uptrend back, right? Weekly downtrend. We have a nice, beautiful engulfing move. Now we need to reset the weekly uptrend. Only two possibilities, the V-shape engulfer, and then do something like this, or the two-step process where we set the higher low and then attack these with a bit more momentum, right? So those are going to be the two types of setups we're looking for the break of all-time highs on SMH. No red flags as of yet. Bulls back in control of the daily and fully engulfing your weekly move down as well. Moving on to IWM Russell. So growth stocks today, not having the best day, not having the worst day, just kind of in the middle, right? 0.21% to the upside, still within the last two trading days candles, however. So still in this pattern of a nice daily uptrend. Any move lower, such as currently, just going to be looking for a higher low. Anything above 202.58, looking for the higher low for further trend continuation. However, if we lose this and set up for a daily downtrend, let's say CPI is bad for some reason or whatnot, just going to be looking, guys, for the weekly higher low, right? The size of this move was fairly juicy. We were in a beautiful weekly uptrend back here. We then lost it. We're looking for the size of the move, and the size of the move was fairly adequate so far, guys. The move on the Russell coming back almost 80% of the way. So the probabilities do favor the bulls to be able to set a higher low and then go for the weekly trend change. Area of support are below us, 201 down to about 195. I'll remind you that is the big area the markets were trapped under for about a year and a half, and now we're above them. So stands to argue that this level should be acting as support for the markets before we potentially attack the 212 level one more time. Now moving on to the Dow Jones. Give me a quick second. All right, so moving on to the Dow Jones, guys, 0.21% to the downside. Well, the Dow Jones deserves it, guys. They've been running up for pretty much 7-8 days in a row. Not even daily overbought yet, just pretty much an extended rally, right? On the shorter time frames, we haven't really lost the hourly trend yet. Double bottom right now, but if we do lose this hourly trend further into tomorrow, perhaps could just be healthy daily consolidation. Anything above 37,800, very healthy area for a pullback before further trend continuation. Target this area right here at a first glance, 38,800. Most of your moving averages are right there as well. And on the weekly, guys, we were in a gorgeous weekly uptrend, lost the weekly uptrend, and now we were looking, can the bulls recapture the V-shaped formation, totally engulfing the move, or will they have to do the two-step process, right? I'm favoring the two-step process on a lot of these indexes. Unless CPI is very, very bullish, then we may just get the blast through the all-time highs. But as of now, even if we start trending a little bit lower here on the daily, set a daily downtrend after such a big 4-week move, just going to be looking for the weekly higher low for further trend continuation. No red flags on the Dow Jones just yet. Now, let's do a little bit of yield since we haven't covered yields in a while. So yields, still looking for the exact same trade here, guys, right? Obviously, we were in a monthly uptrend, but we're expecting a monthly high, lower high, and then potentially lower low for the monthly downtrend to start happening. Rates have obviously peaked, and Jerome Powell 2 weeks ago told us that there's no thoughts of increasing rates any further. So these rates should be decreasing over time. Just expecting the monthly lower high, into lower low. How do you know that that's finally happening, guys? Well, you need these bulls to lose the weekly uptrend. If we can fail, set a weekly downtrend, you know that your monthly lower high is most likely set and that we're just going to start attacking these lower levels again around the 4.17 range on the 20-year yield. And the same analysis applies for the 10-year yield. Same thing that we're going for here, guys. Just keep a close watch on when the bulls lose this weekly uptrend into a weekly downtrend. That is the move that I'm looking for to take further positions on these interest rate sensitive names, and I will be doing that with the 20-year leveraged bond product, TMF. It's just not ready yet, guys. The yields move very, very slow. It's not like we're trading growth stocks, right? So we need to be very, very patient for this trade. The first thing we're going to watch out for is what already happens, daily downtrend, right? We need to then see the weekly reversal into a weekly downtrend. Then we know, guys, that the monthly lower highs are most likely set, and then we can target areas moving down here below and down into the 3.7 range on the 20-year. So that's just a little bit of yield analysis, but but so far, so good. Yields have been trending down. Now let's move into a little bit of a crypto, because crypto, I mean, we haven't done an update in a few days, so might as well, right? So Bitcoin still trying to reverse this, guys, still trying to reverse this move right here. Very, very choppy in Bitcoin, guys. This is really just a weekly downtrend grind lower, right? For the past 5, 6, 7 weeks at this point, just a very big grind lower. But I mean, we're grinding within the area of prior all-time high support. This is pretty much 66 down to about 58,000. No red flags in my opinion just yet. What we do need to see from the bulls quickly though is a daily trend breakout. Need to see them break 65,500. If we can get that daily uptrend breakout, it's going to look very good to say that the weekly lows are pretty much in, and then we can start trying to reverse this back into a weekly uptrend. As of now, your bears are in full control though, weekly downtrend, which is just pretty much very, very healthy monthly consolidation, right? We needed a little bit of consolidation after 7 months of upside. Now we're getting it. The best case scenario is currently underway, guys. We're really consolidating sideways rather than just coming straight shot down like we came off the previous all-time highs. So I don't see any real-time big red flags on Bitcoin as of yet. But the bulls definitely need to get their butts in gear and start getting some of these daily trends back. Moving on to Ethereum right now, same analysis as Bitcoin, right? Ethereum's been kind of trapped in this daily downtrend for a while right now. We are still protecting our prior lows, however, not really flushing below them. That's only 2850 to around 2900 mark. What Ethereum needs to do here, guys, really need to get a daily uptrend shift going, and then we can start reversing some of this damage that's been done on the weekly and start reversing that as well. But it all starts on the daily so far. Ethereum just really consolidating, setting the monthly higher low, and for further trend continuation, right? The lowest that I maybe expect Ethereum to come to is right down here, your monthly 12 EMA and your prior areas of support, which we're kind of getting into right now. I should probably make this box a little bit bigger because it is actually 2,600 down to about 2,200. This $400 range is probably a very good area for the bulls to gather a bit more momentum from before attacking the higher levels once more throughout the year. So crypto looking fairly decent, just a time to slowly dollar cost average in if you are very bullish on crypto. All right, moving on to our big tech stocks, guys. Sorry if I have to mute myself a few times. Still a little bit of a cough from the cold that I had last week. So in terms of Apple, guys, let's get into our big tech names. So Apple not looking bad at all, up 1.76%. Apple was actually up about 2% on the day, pulling slightly back, but that's very, very, very fine. Now, daily uptrend momentum on Apple is good, so any pullback at this point, even if we can't eclipse the post-earnings highs, any pullback's just going to be looking for a daily higher low for further trend continuation. And in the worst case scenario, guys, if we lose this setup and start trending lower, just going to be looking on the weekly for that weekly higher low. Look at Apple's big engulfing move on the weekly, right? It was a weekly downtrend this entire time. Boom, engulfing move. Now, eventually, we will need to set that weekly higher low for further trend continuation, which is why I say 180 to 178 is such a juicy pocket. If we come anywhere close to these prices, again, I will be going fairly heavy on Apple, looking extremely good above all of our moving averages on the daily, and now finally back above all of our moving averages on the weekly time frame, which we have not been able to say since all the way back here in December. So very notable move by Apple. Looking forward to see if the company can continue to deliver on its expectations. Moving on to AMD right now. AMD not having the best day, about 0.9% to the downside. And AMD truly right now, guys, is just stuck in this extended daily downtrend, right? It's very clear as day. Daily downtrend just simply continues putting in legs lower and lower. So at this point, guys, the analysis remains the same. We got a nice bounce on AMD, but if they cannot convert into the daily uptrend, guys, the bears will just remain in control, and we're going to have to find where the floor of this move down is. As of now, I'll remind you, it is currently top-down analysis, right? We're still hunting for the monthly higher low on AMD for further trend continuation. Now, a big part of me does truly believe that it is in this area and it's coming shortly. 142 down to about 133 is the buy zone for me. Weekly downtrend, right? This could be the last leg down into this level right here. NVIDIA earnings coming up next week. So if ever semiconductors are muted this week heading into that, that may be the last time for AMD to pull back into this area. However, that is just speculation, right? As of now, the bulls have a good bounce, looking for the daily higher low. And then if we can break 158 to the upside, it would be a very nice first daily uptrend since this entire sell-off. It will be the first daily uptrend since pretty much back here in the month of March. So AMD still with a lot of work to do, but I like it as we get closer to these lower levels. Moving on to Amazon right now. Amazon having a little bit of a pullback day, but that's okay. That's what we forecasted as well. If Amazon has a little bit of a pullback day, just looking for a daily higher low, anything above 175-ish. Just going to be looking for that daily higher low for further trend continuation. All of our moving averages are right here. Tons of space between us and these lows. Very healthy pullback on Amazon before a potential future leg higher. On the weekly, Amazon is looking extremely, extremely strong. Gorgeous weekly uptrend right now. Even, guys, even if we were to set a daily downtrend for XYZ reason, right? Is it a big deal? No, because Amazon has tons of space on the weekly time frame to pull back, set a weekly higher low, and just continue this uptrend. I really do believe Amazon should have no problem hitting that $200 psychological mark over the next coming months. Looking very good for the stock. Myself personally, to add to any positions, right, we would have to get a heck of a drop on Amazon. I'd have to see the mid 170 levels again to get interested, at least for some larger swing trades. But if you're a long-term investor, guys, I mean, never any bad period in time, right? If you're just dollar cost averaging every single week, I see no reason to not buy Amazon for a longer-term portfolio even here, because even at $178, guys, the PEG ratio is really not that rich. They are expanding the company fairly aggressively in terms of profit margins. Now moving on to Google, give me a quick second again. You guys know when Google comes up, I got to drink my coffee, right? Google, insane day of recovery today. Started the morning off with a big gap down open. Take a look at this gap down open, guys. Almost 2.5% down before putting in a fully engulfing move. Love to see it by the bulls. Great momentum there. Now, still looking for the resumption of the daily uptrend. As of now, after the move from earnings, right, guys? After the move from earnings, we have still been in a little bit of a tightening range. Google's really just consolidating sideways at this point. What we need to see at this point is a break of 173.04, break 173.04, daily uptrend is back underway, and our weekly trend expansion can potentially continue with a leg higher. No red flags on Google right now for the time being. What I'm personally looking out for is if ever Google's AI event tomorrow is not well received, and couple that with negative CPI, if we can go and get the earnings gap fill down here towards the lower 160 level, that is where I'm looking to play Google personally. But as of now, guys, if the market remains bullish, I see no reason that Google should not be able to push the levels. Obviously, future price targets. At this point, since we're at the all-time highs, we have to go with psychological levels. Similar to Amazon, the next psychological levels is right up here at the $200 mark. So looking fairly decent for Google. Nothing bad to say. And even if we lose this, guys, it is a big deal. No, because we have so much space on the weekly to set the weekly higher low for further trend continuation. And oh, look, the 12 EMA is right there at $160. My juicy location for playing Google. Now moving on to Meta. Meta also not looking too bad, even though they pulled back 1.72%. We were always expecting for this move after earnings, right? This move was going to top out somewhere, and the most likely place that it was going to top out was at previous resistance. So this yellow line right here, 480, 482, let's call it, this whole zone right there. Couple that with the fact that we're running into our moving averages as well. So Meta potentially likely coming into a bit of daily consolidation, but that's fine. Just looking to set the daily higher low, anything above 427, just gonna be looking for that daily higher low for further trend continuation. Meta just might need to pull back a little bit, gather some momentum to smash through this area hard. All in all though, guys, looking fairly juicy as a trade. No red flags for Meta either. If we pull back, I'm waiting on this one. If we have a little day of pullback tomorrow, I'll probably be writing some short puts down here, maybe in the 450, 440 area, looking very good. Meta really starting to full recover mode right now. And the weekly bounce, guys, right? Obviously, we lost the weekly uptrend when we flushed these lows right here. So Meta has a lot of work to do on the weekly, need to get that weekly uptrend back. So it could be a fairly lengthy process to do that. But as of now, the bulls are doing a very, very good job. The size of the bounce so far is quite adequate, up to 50%. Would like to see them get a little bit more. If we can drive up into the 480, 482 range, that should pretty much give us around the 618 level, and that would be a lot healthier, guys, for a trend reversal pattern back up to the all-time highs. Now moving into Microsoft. Microsoft also not looking too bad on the day, despite being down 0.25%. Microsoft just doing what Microsoft does best, right? Just kind of grinding higher here. So now we're trying to break above our prior top end of this range right here. That is the 415 level that we're currently battling with, right? Nice daily uptrend underway. We're pulling back right now, so any pullback is just going to be for a higher low, anything above 407. for the higher low for the trend continuation. If we lose 407 and potentially set up for a daily downtrend, that is okay, guys. Microsoft has now created a lot of space off the lows to set the weekly higher low and maybe go for the weekly trend shift back to the bulls, right? Any move lower, guys, I would be targeting the lower bound of this support range right here. Around 400 seems to be like a very juicy opportunity to swing trade Microsoft. Microsoft always in a beautiful, beautiful, beautiful monthly uptrend right now, just looking for that next leg higher to potentially come. So all in all, looking very good. I get more interested in playing Microsoft if we get a revisit of that 400 level. Moving on to Netflix right now. Netflix also pretty much really eclipsing these highs right here. So really getting all of that earnings gap down move back at this point. Gorgeous daily uptrend underway. As soon as this move tops out, once again, just looking for that daily higher low, anything above 545, daily higher low for further trend continuation. Netflix has a few beautiful support levels below it right now. All the moving averages down here at about 595 and the first line touch at about 600, which is your previous support. No red flags for Netflix at all. Did a great job in recapturing this weekly momentum here, guys, right? Weekly uptrend was lost to these lows, lost the weekly uptrend. Now look at the size of the bounce by the bulls. Absolutely insane, up about 80% from that drop. So really sets them up nicely, guys. If they can't V-shape engulf this move completely, at least they have a lot of space to create the two-step weekly uptrend recovery. No red flags on Netflix. As a matter of fact, if it does pull back into this area, there could be a juicy swing trade to be had if you're writing short puts maybe below the 570. I know that's very expensive, but I may even be looking to play some long call options if I can get them cheap enough, or maybe even going with some call debit spreads. That's a bullish call strategy. Haven't used it in a while, guys, but as these markets get more and more favorable, you will start seeing me play more and more long options. It's just in a high rate environment, guys. Usually I always sell options, but if I would have had the channel back in 2019, 2020, and 2021, you guys would have seen some juicy call option plays, and I promise you they will be coming back soon because they are an integral part of my trading bag as well. Moving on to NVIDIA. NVIDIA also looking fairly okay, guys. 0.58% to the upside. Nothing bad to say about this company whatsoever, right? Looking very, very healthy, right? Daily uptrend. Currently just hunting for the daily higher low right now for further trend continuation. Obviously, a break of 921 will just continue the daily uptrend. And we have a lot of space, guys, between us and the 812. So even NVIDIA could just grind lower, would still just be looking for the daily higher low for further trend continuation. Few elements of support below us. Well, your short-term moving averages are right here, 879, 875. And also you have the 50-day moving average, which is really in line with our previous horizontal support around the 850 level, right? 847, 850-ish. NVIDIA looking extremely healthy, recapturing a lot of this weekly downside that we had, right? Weekly higher low, looking for trend continuation. Keep in mind, guys, NVIDIA has earnings next Wednesday. So are we really expecting, well, I mean, unless CPI is very bullish, NVIDIA could just explode, right? But in the event that CPI is negative or slightly flat and the markets don't do too much this week, maybe we could just expect NVIDIA to kind of range flat until those earnings come through, right? Obviously, if earnings are crazy bullish, break of the 971 seems likely all the way to 1,000. And if earnings are kind of underwhelming for XYZ reason, I would not be surprised, guys, if we maybe retest the lower 800 level. That would be where I'd be more willing to play NVIDIA more aggressively, right? Would be between 800 and this green box right here at about the 750 mark, where the valuation is a bit more manageable. Now moving into Tesla stock. Tesla stock up about 2% on the day, but it really doesn't show, does it, right? Tesla really still kind of trapped in this lower bound of support. Let me make this green box a bit more pale because I think it's kind of a bit aggressive green right now. Maybe you can see the candles a bit better now. Hope you can. So Tesla daily downtrend, right? Huge rally after earnings. We were looking for the bulls to potentially set the daily higher low and move into a new uptrend. Nope, couldn't do it. Got the daily downtrend right away. And that is still the case. Still eyeing for the lower levels of our support right now, which is pretty much the 160 level. Need the bulls to hold this level here, guys. Why? Well, crucial level of support on the weekly as well. Look at this weekly engulfing move after earnings, right? Big weekly downtrend this entire time. Finally, engulfing move, eclipsing the previous highs of the downward move. Now it's up to the bulls to set the weekly higher low to change into a weekly uptrend. We have not had a weekly uptrend on Tesla, guys, arguably pretty much since last November. So it's been a very long time. Now, that being said, guys, the bears are starting to take back an uncomfortable amount of this move. They've already taken back 50%. The reason I say the 160 level is crucial, that is the 618. If the bears take back too much of this move, guys, the best case scenario for your bulls is a tightening range The worst case is simply just a lower high into the rollover on the weekly trend back into a weekly downtrend. So they need the bulls, if they want to change these higher time frames, you absolutely need to protect this level down here, this 160 range. So need to first find our floor and then get back into a daily uptrend. As soon as we see that daily uptrend back, you know your weekly higher lows are set and potentially moving on for one leg higher. Now moving on to Palantir. Palantir not looking too bad today after its earnings drop, right? So 1.67, 1.65% to the upside, looking fairly decent for a little bit of a recovery move. Not daily oversold conditions or anything, but coming into the lower end of our support range that we previously had. And obviously this green box, guys, right, prior from 2020, 2021, that is support, resistance, resistance. Now we're coming into this area, should be acting as support once more. The bulls have a lot of work to do, however, right? We had the daily uptrend before earnings. We lost it with the flush. So now the bulls have to start everything from scratch, need to see the start of a daily uptrend manifesting, right? To be safe that really our weekly lows are in at this point. So looking not too bad on Palantir, but the bulls still have a lot of work to do. In terms of our hourly, we're finally, right? No hourly uptrend in sight. Now we got a little bit of a bounce. Remains to be seen. Can we continue this hourly uptrend into tomorrow and really get some lift on this daily move higher? Resistance above us, however, $23, this horizontal line from prior, support, resistance, resistance, right? That we may be encountering some difficulties when we run up to it. And prior to that, our moving averages right here at about 22.20 as well. So Palantir has its work cut out for it. Going to be looking for the first sign of that daily uptrend to really start recapturing a little bit more of this weekly move too, right? So Palantir, still a good opportunity for a swing trade, guys. A lower 19s seems to be a decent value for me. Now moving on to PayPal. PayPal up 1.62%, but you really can't tell because it's within Friday's close candle, right? So daily downtrend still underway for PayPal stock. Unfortunately, the bulls need to start everything from scratch and need to see a new daily uptrend to confirm that this weekly move lower is finished. However, we're coming up on a big area of support right now. 63 down to about $61 is going to be the area the bulls cannot lose. Why can they not lose it? Well, it is key weekly structure here, guys. If we close below this guy right here around $62, it would be the start of a new weekly downtrend. It would be undoing all this gorgeous work we've done for the weekly uptrend so far. So I need to see the bulls protect this. If we lose this, guys, could just be a case of just sideways consolidation on PayPal as we move throughout the year. As they've said, it's a transition year for the company, so I'm not expecting some huge volatile moves to the upside unless they really start increasing their net margins and their free cash flow, guys. If you start seeing increases in those two things, that is when the stock's going to move. But as of now, Wall Street is not pricing that one in. This is why the stock is just maintaining around these relative levels. Still, I mean, it's not looking weak, but it's definitely not looking strong either. So still a time to be patient for PayPal holders, unfortunately. Now, that's pretty much everything I had for you guys in terms of our major market rundown and our big tech names. Let's take a quick look at my portfolio. All right, guys, so taking a look at the portfolio today, we're doing actually quite well year to date. We're up almost about 15.64%. That is better than the S&P. The S&P currently trading at about 9.5% to the upside. So outperforming the S&P and outperforming the NASDAQ as well. This most recent earnings season has been very kind to us. I'm very pleased with the gains. We rearranged the strategy a little bit, playing the volatility, and everything has been working out perfectly. 15.64% year to date, and the NASDAQ is currently up about 9%. So we're beating both indexes. Quite pleased about our portfolio recovery. Since the lows that we started the year, minus 14% down, up 15%, big 30% swing, just very consistent trading and sticking to the strategy. Obviously, we had a few losses along the way. We've shared them on the channel, but for the most part, guys, we just keep moving ahead. In terms of the positions for the week, well, we got assigned a few ones a couple weeks ago, right? We got assigned these SoFi positions after, about 2 weeks ago now. We were able to write some covered calls. This is now the second week in a row that I've been writing covered calls on SoFi. Our average cost on SoFi now, all in, the stock minus all the premium received, is about $6.33. So well below the current $7 mark right now. We got some juicy covered calls on SoFi today, 27 cents. That's about 4%, right? Looking very good. So looking to make the most out of this position the whole time that it sticks around $7. Palantir as well. Palantir, we got assigned last week 3 contracts at 22, 3 contracts at 21. The midpoint is 21.5 minus the premium we received for those puts. It gives us an average cost on Palantir stock of about 20.77. That is right down here. So we're actually in profit right now, barely, but we are in the green with the premium received. So we chose to route the 21.5 above us right now, and we got compensated fairly nicely for them. We got about 1% for the week, 21 cents. For these contracts, and we just covered up all 6 contracts, right? So looking very good on those 2 positions. Now, before I do the GME ones, because I want to explain it longer, right? We're going to go over the rest, and I'll do GME at the end. So Square, we wrote the 66 puts. I like Square around 66, guys. Square around the 66 marks. We are really in the juicy area of prior support, right? 65, 64. I went with the 66s. We do still have a decent margin of safety right now. Square was down on the day about 2.2%. So that's why I took this trade. Down to 66 would be another 5.2%, which is a big move even for Square. If that happens, at least we'll be coming into big support. And we're just looking really for this whole lower end of the monthly range to be acting as support, right? $60, $63. So that's why we went with that position right there on Square. Looking fairly good. 66 books, 29 cents. Not quite 0.5%, but almost. I still like this trade and I like this company. We'll see how those end on the week. Now we went with the BABA earnings play as well. We went with the BABA earnings play 77s and 78 puts. Now, that on BABA, right? BABA has had a tremendous rally up pre-earnings, right? So far in the last 3 weeks, BABA is already up from the bottom about 24%. Now, usually when this happens, guys, a lot of the times the earnings move gets baked in already. So unless Alibaba has some truly outstanding earnings tomorrow, which sends it to the moon, most likely we could be seeing a little bit of a pullback, similar to what happened on Palantir last week. In the case we do get a pullback, guys, I am right down here, 77 to 78. That is the top end of prior resistance. Could be a juicy area for the bulls to regather some strength if ever earnings do come down there. The reason I didn't go for calls on Alibaba is because they've moved up so much. If we come down after earnings back to retest this area, this is the location where I may be taking some longer term leap calls for the stock. So we'll see what happens with that. Alibaba has earnings tomorrow before the open. Now, moving into the next one, Elf Beauty. Elf Beauty was featured on my top 5 options plays of the week. We were looking for anything below 150. So 150 zone was very juicy area of support. 200-day moving average is there as well. Just looking for the monthly continuation of this uptrend, right? Monthly high or low. That's what we're searching for continuation. Decent margin of safety right now from current share price. I wrote it because it was down about 1.5% on the day right over here. We have a decent cushion between us and 149. Still about almost 8%, right? Guys, I know Elf Beauty can move a lot, but 8% is a decent margin of safety. We got 60 cents. We didn't quite get the exact 0.5%, which would be 75 cents or better, but I'm fairly happy on the risk to reward level for that position. Now, moving on to Google. Google as well had come significantly down over the course of the morning, right? So Google, as I showed you earlier in our analysis section, we came really down here, right? So I was able to pick these almost at the bottom around the mid 166 range, and we were targeting the 162. 162, guys, isn't quite the area that I highlighted, right? Prior resistance should be acting as support. That's 160. There just wasn't enough premium at the 160s. So I went one strike higher at the 162.50s. It's almost there. And since we have such a nice fallback zone into here, fairly confident with this position. And so far, so good. The stock from the moment we took that trade has been fairly positive on the day. So we're already well in profit in this position. We wrote this for 82 cents, which is pretty much our 0.5% rule respected. And they're already 38 cents, right? So more than 50% gain in one single day of trading. Love to see that. Then we went with another earnings play, Home Depot 320s, right? So Home Depot with earnings tomorrow morning before the open. The expected move on Home Depot was about 3.5%. We went with the 320s. So 320s, guys, is roughly right. We're looking on the monthly, right? Breakout, retest of the range, nice support down here in the lower area. And the lower bound of this area really is that 320 mark. So in terms of percentage drops, right? We do still have about 6% wiggle room, 6.2% wiggle room, right? Not quite twice the expected move on options, but almost, right? I know Home Depot is somewhat of a consumer discretionary stock, but then again, there is a lot of contractors and construction people that do buy supplies from there. So we might get a little bit of a bump from there because obviously we know that real estate market, even though it's been slow, a lot of new projects, a lot of new developments. So curious to see what happens on their earnings. If anything, at least we have a good fallback region of support down here. We'll see how that one plays out. We only got about 82 cents for it. Not the best, but then again, anything below that really had no premium at all. And anything above that, in my opinion, was a little bit too close. So the real sweet spot trade was about 320. We'll see what happens with those. And then we went with the Ubers. Ubers also featured on my top 10 plays for the week. We got 24 cents for the 63s. Not quite 0.5%, but Uber didn't really drop that much over the course of the day. I wasn't able to really pick the lows here at the morning, right? I kind of got a little bit higher. I got about the 65s off this big morning drop, and then it dropped further. So if I would have waited a little bit more, could have got better premium. But as a whole, guys, the 63s are not too bad. We were really looking for anything under the expected move. The expected move was 64.99. We tagged it this morning, right? So anything under that is fairly good. 63s are fairly close to the 200 daily moving average. And if worst case scenario we go down, well, at least I have my big fallback location, prior all-time highs, looking for the monthly high or low down roughly this $60 mark. So we only went with really one contract, and that's just because if ever it drops lower, I may throw in another contract at the 60, maybe even the 59s, try to build a little bit of a position in Uber. And now we get to the juicy stuff, guys. So now we're gonna go over the GME plays. So you can see we wrote the 16 puts and the 20 puts. We're going for the volatility play, guys. We're not gonna make a directional trade on this one. Just looking to play the extended volatility, right? So I waited for this stock to kind of do its thing in the morning, right? Kind of rallying up to the upside here. Here is your opening candles right here, up, down aggressively, and right in this range of consolidation right here is where I wrote pretty much these positions, right? Well, the 10s, I got them a little bit higher, but all in all, guys, we were waiting for the range of consolidation. We wrote the 16s. 16s, guys, would be literally below Thursday's prior candle. So I'm looking for this market to at least hold up the gains throughout this week above 16. I think there's a high probability of the markets doing that, right? This trade is brand new. There's a lot of hype around it, a lot of retail support for this trade, and I think that should last at least more than one single day, right? So that being said, we went very safe with the $16 strike on 3 contracts. Didn't go heavier. I'm waiting for the market. If we get a really big pullback tomorrow or something like that, I'll probably throw more at it, but between really the $20 and $16 range seems to be a safe location for us. I mean, it would need to drop over 50% by Friday, and I know this one can move a lot, but in my opinion, that's an unlikely move. We didn't get quite 1% on these, but fairly decent risk to reward, right? Over 0.5%. I know it's not that much premium, guys, but we're in the business of just making steady ROI in the least risky fashion possible, right? And the riskier one is only one contract. I wrote one contract at the 20s, and you can see as we get closer and if we go a little bit higher, right, you can see the net shift in premium. Only got 10 cents for these, but I got 60 cents for the 20 puts, which is 3% for a single week, looking fairly juicy. But once again, I went light, guys. Only one contract. I'm looking for maybe a little bit of an institutional attempt at really shorting this. If we come back down 25, then I may load up a few more contracts down here. 16, 17, 18 seems to be a good spot for me. Just looking to play the volatility, guys. In terms of buying options, I mean, implied volatility, guys, is 400% on GameStop right now, right? The at the money calls are like $6. Huge premiums right now. So I probably won't be buying any options, but selling options down here seems to be like the decent play that we're going for and really in line with our overall strategy of selling premium in the most risk averse way possible while still getting a decent amount of money for it, right? So that's the play on GME I'll be looking to make over the course of the week, and I'll keep you guys updated. That's pretty much everything that I had for you guys today. So hope you guys enjoyed the video. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Consider also subscribing if you're new here. We do these videos every Monday to Friday, so consider subscribing if you like this type of content. And lastly, if you have any questions at all, specific stock you want me to look into, technical analysis, an options play, macro environment discussion, anything you want, guys, leave it down below in the comments and I'll always answer you within the first 24 hours. So take care, guys. Happy trading tomorrow. I'll see you tomorrow after the close. Peace.